We're catching up with Keith Neumeyer, CEO of First Majestic here at the BMO Metals and Mining Conference. Keith, welcome back to the show.
Nice seeing you again, Daniela.
So we're talking your game plan for 2018. Saw a lot of news coming out of your company. I want to talk to you first and foremost about Primero and your game plan with turning around this mine.
Sure. 2018 is going to be an interesting year from many perspectives because 2017 was really the first year in 5 years that we actually started reinvesting capital in our operations. Our 6 mines have suffered from investment. 3 of the 6 mines actually are producing less silver today than they did 3 or 4 years ago, and that's directly related to lack of investment in development, underground development, which is very critical to a mine. And San Dimas, Primero's mine, is exactly the same situation. They haven't had the cash flows to reinvest, and it suffered. It's also producing less silver today than it did a few years ago as a result of the lack of investment. So we're going to go in and start investing capital, and we're not putting out any guidance yet. We'll do that later in the next few months. We have people on site. We're putting together our short list of to-do actions and items and so on, and we're pretty excited about it. We're going to see. It's going to become our biggest mine.
Keith, what's your response to investors who say, yes, it's great that you're expanding resources, but at basically a cost that challenges your balance sheet here?
Yeah, we came through a couple of pretty difficult years, 2014, 2015, low metal prices. We're actually losing money in 2014 on silver that we were producing, which is not a business. You're losing money, it's not a real business. So we had to really change the business, and we brought in technology, we lowered our costs dramatically. Our costs are about 50% of where they were, back in 2011, 2012. And so, that cash flow that we're now experiencing in the business, we're plowing all of that back into investments in the mines, that have suffered for 3 or 4 years of lack of investment. So, I think 2018 is going to be exciting because we're going to start to see these mines start to produce more silver for the first time in 3 years. And 2019, with the addition of San Dimas, is going to be a huge year for us.
Keith, let's talk silver price now. I know last time we spoke, you said, look, 3-digit silver is not out of the question for you. We still haven't hit $20 here.
It's very frustrating. At this conference, there was, at the lunch yesterday, they were talking about, metals, industrial metals, and, you couldn't mine a Bitcoin without silver. Think about that for a second. We wouldn't even be doing this interview without silver. You couldn't produce a Tesla car without silver. So, but yet no one talks about silver as the green metal. Silver is critical in achieving what we want to achieve as a human race. And people are talking about nickel and they're talking about cobalt. They should be talking about silver, because none of this other metals would even matter if silver wasn't part of the whole mix. And it is frustrating. It's not showing up in the headlines. I think it will. I think there will be a sea change, and when that occurs, we'll see ratio compression. And trading at 81 gold silver makes no sense to me when we're mining 9 to 1. How does that make sense?
Yeah. Well, what's interesting, Keith, I've been to a few back-to-back conferences, and the conferences are packed, so the investors are showing up, but they're not buying in yet. So what's it going to take to get that investor interest really back here?
Yeah, a lot of this conference, for example, you've got some of the largest institutional investors in the world here at this conference, and representing trillions of dollars in investment capital, and they are looking at the mining sector because they see the value. They see it's been weak for several years now, and they know they should be buying it. So they're kicking the tires for sure, but no one wants to be wrong, right? They are fund managers. They do have a reporting structure. Their job is to make a profit. If they're buying Google or chasing Apple and making a couple of % a month, that's pretty easy money, and a lot of them just don't want to take the risk and buy a mining company that could be down 5 or 10% over the next couple of weeks. They don't want to take that risk. So an example, when First Majestic was trading around $5 or $4 in early 2016, the stock ran to $25 within 6 months, and the institutions came in very late. It was the retail buyer that drove that stock up. And then when the stock hit double digits, that's when the institutions come in, because they feel more comfortable investing after the move has started, because they look at it as less risky.
So sticking to your 130 silver call, $8,000 gold?
Absolutely. I'm not going to, I think, some people think I'm a quack, and I hear people talking about some of my predictions, but I'll stick to my guns, and I think I'll be right ultimately. And silver is extremely important. People look at it as the poor man's gold, which is absolutely the wrong way to look at silver. Silver is an extremely critical metal. It's a very strategic metal in everything we're trying to accomplish, and the investment community will figure it out eventually.
You need to definitely have tough skin in this business. Keith Neumeyer.
Yeah, 15 years at this already. So.
Thanks so much for joining us.
Good seeing you again.
And thanks for watching our coverage here from the BMO Metals and Mining Conference. We'll have more for you on Kitco.com.